Okay. I think we're live now. We're live now. Okay.
Awesome.
Hi, Rishi. Thank you so much for coming to Venture with Grace today.
Thank you for having me, Grace. Good to see you.
Um, you too. I feel like you are so first of all, like you have raised money during this really like frozen basically like frozen stage of like venture capital, which is like extremely impressive. So for the audience who don't know you, I want to give them a quick background rundown. So you started your career kind of in venture. So besides like you work at Merrill Lynch as an analyst. So you have worked at Scale Venture Partners, you have worked at Metrics. And then, you went into operation, you work at two different companies as like the first hire of one of the company as like a first hire in the non-eng spot.
Yep.
And then the other one is Legion Technology. And later on, like you started on the side, you started like a concept fund first
Yeah.
for your current venture fund, and then now it become a full blown like venture fund itself. For the audience who don't know you, I would love for them to get to know you a little bit. Also, you grew up in Malaysia, right?
Indonesia.
Indonesia. Yeah, yeah, yeah. Okay, talk about that because, I'm also, as you know, I'm from China. So like I wanted to learn more about like, your experience on like, growing up there in Asia.
Yeah, absolutely. So I was originally born in Canada, and then lived there for 3 years, and then moved to Indonesia with my family when my dad got transferred to Southeast Asia.
Yeah. What
And
does he do? I mean, like,
my dad
I'm
worked in
sorry,
oil
this
and
like
gas. Yeah, he worked in oil and gas, and so he was tasked with helping set up the facility in Indonesia.
mhm,
And so this is in 1990, and
mhm,
so we moved there as expats.
mhm,
And typically, expat stints are going to be 2 years, 4 years, and then you kind of move back.
mhm,
And so my family was unique in that 4 years turned into my parents spending 32 years in
mhm.
Southeast Asia across both
I have to know what do they
Indonesia
eat
and then
for
Singapore.
food. I need to
Oh,
know
I
what
mean,
what they eat for food.
like Indonesia and Jakarta, especially,
Mhm,
is a metropolitan city, right? I mean, you had
mhm,
anything and everything available. Mexican food,
mhm,
burgers and steak, Indian food,
mhm,
Thai food, Indonesian food. Anything you would imagine, just because it was it's such a vibrant city.
mhm,
And so it was such an amazing experience to grow up there. I went to the international school, had
mhm.
students representing 67 different nationalities at the school, and so it was a lot of fun. And I look back on that time very fondly. And Jakarta will always be home. But yeah, moved from Indonesia to the U.S. And then have stayed here ever since.
So cool. So I wonder when you were like, so basically when you were working for your like basically for venture funds, and what were some things that you've learned early on in your career that you kind of took into operating to starting your own venture fund today? And what did you learn from like as being as an operator that you kind of like use things that you've learned to kind of like screen out the deals or like picking the best deals within your journey?
Yeah,
Yeah.
absolutely. Look, I think a lot of times, venture capital can
Mhm,
feel very complicated and
mhm,
difficult, and I think we
mhm,
tend to overcomplicate things. I
mhm,
believe that great companies are going to share,
mhm,
three common characteristics. First and foremost, tremendous founder
mhm,
or founders, and I think we'll get into what that means. But
mhm,
founders first, and that's something I learned from Rory O'Driscoll, Kate Mitchell, and the team over at Scale Venture
mhm,
Partners. It always starts with the people, because
mhm,
that's the thing that you want to change. You don't want to change at all. You want to change the least.
mhm,
Then it's what is the market that is being attacked,
mhm,
and is it an existing market? Is it a growing market? How big is the market? This is something that you also want to pay attention to, simply because a great idea in a very small market is not going to deliver a venture return or a
mhm,
venture scale return, and that's difficult to invest in the business that we are in. And then third is the product vision, and kind of where
mhm,
is the founder's idea of the future mapping. What is it going to look like?
mhm,
And how is an industry going to change? Things of that sort. And that is probably the thing that is likely to change the most. And
mhm,
especially as product gets built, you try and identify product market fit and so on. And so,
mhm,
I look at things from the lens of founder, market, and product vision as big inputs in making a decision. And I think this is true from working at scale at Matrix, doing it as an angel fund before taking Garuda full time, and even in the companies that I chose to work for and the
Mhm.
founders I chose to work for in the interim.
Mm, I wonder, how do you choose which founder to work for? And then was it a decision that you like specifically made in your venture career? You're like, oh, this company is gonna blow up and let me just join? Or like is this like a approach by an investor and without like they're like, oh, I think Rishi would be amazing in blah position. And like I wonder when you first like, when you were picking because it's an investment on its own, it's probably one of the biggest investment you would make
Sure,
because it's your time, right?
that's right.
How do you pick the team? Obviously, the team could be very smart. Did you have a lot of chemistry with the CEO or, like, the founders of the team? And, like or do you feel like it's just a really amazing business opportunity most of it at the beginning? How do you pick what company to join?
Yeah, look, for me, it was a combination of all of the above.
Mhm,
I had happened to know the founder and CEO of Poynt, Osama Badir, for a couple of years
mhm,
prior to going to work for him and for the
mhm,
team at Poynt in 2014. I
mhm,
met him when he was at PayPal,
mhm,
introduced to be a friend of mine. And then, I was at Scale Venture Partners at the time. And then when I moved over to Matrix,
mhm,
Osama had switched over to Google, had launched Google Wallet at Google, and now was kicking an idea around for a new payment terminal, reimagining the dumb gray brick as a smart, connected, and programmable device.
mhm,
He was very close to the partner I worked most closely with at Matrix, Dana Stalder.
mhm,
And so Osama came in to talk about the idea. And I remember we were sitting in one of the conference rooms and just brainstorming and whiteboarding what it could look like. And
mhm,
it was one of those things where, an amazing guy, big market with a product vision. And so we wanted to back him.
mhm,
And so Matrix ended up leading what we call the Series A
mhm,
in the
mhm,
company. But this is a $5 million round, and so in today's parlance would probably be a big seed.
mhm,
And it was Osama and the early team working in a conference room at
mhm,
Matrix. And
mhm,
so I started helping out with some of the kind of more non-technical things, non-product, non-eng, slide decks, financial
mhm,
model. He was making a presentation to one of the large payment processors in the country. And so I helped
mhm,
him with that deck and whatnot. And in working with him and the team, really felt like there was something special here.
mhm,
And one day he came to me and said, "Hey, why don't you come get a real job," as he put it,
mhm,
and join me building this thing. And so, it's worked with the Matrix team, worked with him to finally transition, and ultimately decided to join as the first kind of non-product eng hire, first
mhm,
business hire at Poynt, seventh employee. We were still in the back of the Matrix conference room,
mhm,
and so, what I thought would be, maybe a couple of years, assuming things went well, turned into a 5-year journey, and some of the closest friends that I have now through that time.
I wonder, okay, so couple things there I wanna come out kind of like double click on. So one thing is like, so basically you're seeing the founder is already someone you know for years, and then also they
Mhm.
have worked out like iconic product like, Google Wallet or something that's like
Yeah,
tangible, and then that's like a proven track record with existing experience, right? Let's say if you're entering a situation that let's say like Matrix partner approach you to be like, hey, like we have like this portfolio company and you should join. We think you would be amazing non-engineer hire, but you've never met this team. And then if the team
sure.
is very young, because of like in Silicon Valley, all the founders are like, I don't know, 18. So basically, like, a lot of founders are like, just recently just out of school, grad school or something, and they started their first company without a lot of like operational experience. Maybe they had some internship in some big tech or whatever, but it's not really like operating at first employee at Point, first
Sure.
employee at like Stripe or something, right? So I wonder when you're thinking about joining a team that's more like new and less of a experienced team, what would be your check mark for yourself to be like, okay, they have to hit X, Y, and Z for me to commit into joining them? And also, like when you join Point, it sounds like you also have worked with the CEO in a capacity because you guys are working in the same office, right? So you kind of have a good sense of like what's gonna happen if I just like join there. And I wonder like how do you if you're like if this is like a fresh opportunity that you've never met the CEO, um, how would you approach like to join a startup and which one do you kind of pick to join?
Yeah, look, I think it's you said it earlier. It's not too dissimilar from investing. You're just investing the most scarce resource you have is your
Mhm,
time.
mhm,
And so I would think about it in the same vein almost as an investor, right?
mhm,
Who is the founding team? Who are the is it a single founder, a few founders, and what is their earned insight? What is that secret that they have? What are they
mhm,
building towards? Can they articulate that vision for the future? And is that a vision that you also believe in? Right.
mhm,
As an investor, I will not pretend to be as close to the customers and the customer problem as the founders. I very
mhm,
much rely on them and their insight to dictate the direction that a product needs to go, the future that we want to pull into
mhm,
the present.
mhm,
And so I ask questions about that vision, and I poke and I prod and I
mhm,
interrogate whether or not it's something that they've thought about very deeply. Is this something they're brand new to? Is it something they have experience with themselves, or is it something that they've deeply researched? How can we get a sense of the depth of their thinking around the idea and around the problem to be solved and the market that they're going after, and why the solution that they are building will be different. I think
I
then it's about. Oh, sorry. Go ahead.
I'm sorry. Like I wanted to like I have a quick piggyback question on this. So I wonder you mentioned like, it's an idea, the problem, the market is a solution, right? So but like what if, they have a really high technical mode? Like the founder is very technical, the technical mode is high, like competing with top, I don't know, like players in the category. And I wonder how would you go about like, evaluating if this is like a good fit for you?
Yeah. So for us and for me, what I do is I ask people who understand the technology, who are at the bleeding edge, who would implement the
Mhm,
technology, and largely ask questions about, hey, what are the problems you have? How are you solving them today? Does a solution like this make sense? What questions would you ask of someone who's building in this type of category? And then I go back and ask those questions of the founders and of the team and engage their responses, and even introduce the founders to other, much more deeply technical people than I, to again get a sense of, you know, are they for real, or are they,
mhm,
trying to pull my leg, or talking about something that is more hand wavy and fictional than it is reality.
mm,
And I think this is the case when joining a company as well, right? One wants to
mhm.
understand and believe in the founding team and the leadership and their ability to build a very big company, because otherwise, why would you dedicate your time to it? And so asking questions along the same veins of, the founders, their experience, what they're solving for, where are they going, and how do I, as an individual now joining a company, fit into that broader vision, and can I, in fact, influence and impact the trajectory of that company, are things that I would
Mhm,
factor in when looking for an opportunity. And then,
mhm.
there's a whole host of other questions. I've written about this on my blog,
Wow. Mhm,
about, what you want to be paying attention to and negotiate when you're negotiating your startup offer. And
mhm,
so, everyone can check it out there.
mhm.
taps.substack.com.
I really love that, like, I feel like the tone you're using for your Substack is, like, very fun, light, and also, like, super tactical. I, like, really love that,
Yeah,
and,
thank you. You're very kind.
I just really like the memes, by the way. So, I wonder, I was wondering when you're like, the moving images, I do they consider as meme? But anyway, so I wonder, when you were thinking about, like, I feel like when you were thinking about your career, why did you went into operator side? Because I feel like most VC just stay in VC and, VC is, like, a lot harder to break in, um even like I feel like it's always been hard to break in. I wonder like why what make you decided to pull the plug to go to operating at a company. And I guess also another quick question on that is when you are joining your prayer company, do you feel like the founder was more product focused or were they more like business focused? Like, how should you evaluate if the founder is actually gonna, you know, lead a company into billion-dollar like valuation at least?
Yeah, no, great questions. So yeah, so for me, why did I go operating? I had the chance to work with two great firms at Scale Venture Partners and Matrix Partners,
Mhm,
and got to see differences in approach that
mhm,
the partners at both of those firms had with their companies.
mhm,
And this is 2010 to 2014, and so Andreessen Horowitz had just been formed as an
mhm,
example, and was coming up as a firm that was led by former operators and founders.
mhm,
And I saw that there were a lot more people who were transitioning from building companies to investing in companies. And even
mhm,
if you look at the Matrix partnership, the folks that I got the chance to work with, Dana Stalder, Josh Hanna, and Antonio Rodriguez and the team like that, all former operators and founders
mhm,
that were now advising companies. And the approach and the understanding of both the strategic implications of what was going on and then the tactical, how to actually solve the day-to-day problems, was very evident to me in working particularly at Matrix. And so, I grew up playing basketball, and I
mhm,
likened it to, coaches that I had who had never played basketball themselves versus those that had played basketball and done
mhm,
so at a very high level. And so for me, the idea of going the operator route was largely, okay, let me just understand what it means to be in the game.
mhm,
And in the arena, to use the
mhm,
oft commented on Twitter phrase.
mhm,
And so that's why I wanted to go build companies, because I just wanted to be as close to the ground truth as possible
mhm,
and get the experience for myself. Uh,
mhm,
Not intending necessarily to come back to investing, but just to see what a different approach to career development would look like and what learnings I could gather. And so, I spent 4 years on the venture side, 7 years on the operating side across two companies, and got
mhm,
to work with, as you alluded to, very product oriented, very deeply technical founders who could also traverse between the business side and the product side as
mhm,
easily, and just got to learn from two great people. And it was during that operating phase, the 7 years that I spent building the companies, that I learned about myself. I love working with early stage founders on early stage problems,
mhm,
and it's the thing that I enjoy doing. I get excited by it. It gives me energy. And you mentioned, Garuda Ventures started as a micro fund. In
mhm,
2018 we started Garuda as a micro fund part time to be able to do that with a little bit more scale.
mhm,
And so now, instead of, anybody who's building companies knows, you're kind of heads up, heads down, blinders
mhm,
on, focused on the
mhm.
fires that you're putting out on a daily basis, and
Mhm,
the ones that you have to like let burn, and focus on the ones that matter every day. And so you don't get as much opportunity to understand what else is going around you, what's going on in the industry. And so, Garuda started as a means to just be more plugged in and support founders of the ecosystem with advice, time, and some capital. And in 2021, after I left Legion, after we welcomed my second child into the world, middle of COVID, I'm trying to figure out what next after stepping back to be dad for a little while. It was my wife who said, "Look, you do this for fun. You partner with
mhm,
founders, you help them. Why don't you try and go back into investing and do that full time?" And so that's when I came together with my partner Arpan Punyani, who spent 8 years building Okta from an early employee all the way to a now publicly traded company at a $40 billion market cap, and said, "Hey, why don't we actually go for real?" And
mhm.
that's when we set out to raise this fund that we are now investing out of, our $31 million pre-seed and seed focused fund, focused on companies at the very early stages, building in B2B.
Mm. I have a couple questions there. So one of it was, like when you were like I guess like when you were operating, what were the lessons that you should be intentionally take while operating? And like, so would you join, let's say nowadays, like an AI startup so that you
Sure.
build a network for yourself when you're investing, you can just invest out of this network, right? Like, let's say your colleague who left XYZ startup to create another company or something.
Mhm.
And then I feel like you have a good picking skill by besides like we tried it like right before this, but like I wonder like but I like from observing, you pick Canva, you pick like these two startup to join, and then they all went out to have a good exit, right? Like or like they they're successful in general. So it's not like and then you join them very early on. Let's say like the first company you join or like you're the first like founding employee. What did you do there back then? Like, how do you figure out what your job is? And does the CEO kind of give you a direction? Hey, we go here, and then you just go there, or like, do you have to self made up a bunch of jobs for yourself to keep the company going? How do you understand your job and like at the very early stage, and then how do you pick the right company? Like, and like, was the chemistry with the CEO like 10 out of 10 at the beginning, or was it more of like a 5 out of 10? But like, because you have worked with them, you kind of understand they are on the right path, and then the chemistry certainly grew after that.
Yeah, great question. So look, I think as an early employee, and I don't care if you're
Mhm,
on the business side, on the product side, on the engineering side, whenever you're early to something, there's no system, no process, no tooling in place. You're making it up as you go along. And anybody who tells you different is lying, right?
mhm,
Early stage startup building is largely a collection of people who've come together to try and
mhm,
tackle a big problem, who are
mhm,
trying to justify the existence of the company every
mhm,
single day. Like, why
mhm,
should you exist? And that's what you're banding together to do, is prove that we should exist.
mhm,
And so I think, early building being an early employee, building an early company is not for the faint of heart. It
mhm,
takes a very special type of person to be willing to take on the level of risk versus reward,
mhm,
and join something. But it's a great place to be for someone who wants autonomy and is looking to have
mhm,
some independence, and kind of ownership over a problem, is
mhm,
hungry to learn, is willing to roll up their sleeves and basically jump on any problem, and can work well with people in situations which are largely undefined or
mhm,
new. And so that was both Point and Legion was exactly that. You're building the plane as it's in the air, which is maybe not the best thing to say considering all the Boeing stuff that's going on these days. But
mhm,
you're literally trying to figure it out as you go, and that's why it's so much fun, and why oftentimes, in talking to founders, especially and early employees, as the companies get bigger and you get to more scale and more revenue and customers around the world and so on, the times that we look back on most fondly are those early days,
mhm,
because it was a free for all, and you're
mhm,
just trying to figure it out. And so I think that, as an early employee at a company, you really want to identify what success means, and what does it mean specifically in your role, and help be part of that definition of success, and then have the latitude to go about solving the problems that you face as quickly as you can, because speed is also the most important thing, right? it is
mhm,
it is hard to be a perfectionist at an early stage company, because you are never ever going to do anything 100% of the way right or exactly perfect. It's not possible. And
mhm,
so what you want to make sure you do is weigh kind of speed and quality, and try and get as far as you can to 80% of the
mhm.
way, and then move on, because there are bigger fires that are burning that need to be taken care of, that you want to make sure you go attack. Uh, and you asked the question of the relationship with the founders, and the early team, and how do you build that. Ideally, you've had the chance to get to know the people that you're working with for a little while. Uh, and if not, then I again, I strongly recommend for people who are joining companies early, try a 3 month, contractor phase, get to know the working style, understand the rhythms of the business, and is it the right fit for you? Just because, again, there's always going to be learnings, but you don't want to feel like you've dedicated so much of your time to something that and you could have identified as a not the right fit early on. I had the pleasure of, again, knowing Osama at Poynt for a few years prior to working at Poynt myself, and all, working with him and the team as an investor in the company while I was at Matrix. I got to meet Sanish Monkar, the CEO of Legion, when he was first starting the company, because I got introduced through a colleague at Poynt. And we met at a coffee shop on California Avenue in Palo Alto as he was kicking around the idea. And, I was able to be in touch with him and get to know him over a couple of years before ultimately getting to work at Legion in 2018. And so, or sorry, 2019. And so, relationships do grow over time as well, and bonds strengthen over time. That's inevitable. But as much as you can, try and vet and validate the people you're going to be working for and with before joining, would be my advice.
Would you, I guess, like, I'm sure, like, let's say if their technical skill is amazing, or like they are able to recruit top technical talent. However, like, to build a business, I guess, like, as a first hire on the non-technical side, um, how do you quickly identify your role? And you mentioned that, like, like chatting about like what does a success means, right? Like, but like,
Yeah.
what does the early days look like? And then how do you decided to like stay for 5 years at the prayer, journey?
Yeah.
Like, yeah.
I viewed my role in the early days at both Point and Legion
Mhm,
largely to take the things that Osama and Sanish didn't want on their plates off their plates. I
mhm,
think that, being a founder of any company,
mhm,
uh, I think is one of the hardest jobs out there, and
mhm,
an incredibly lonely job as well, especially as the
mhm,
company gets bigger and problems get bigger, and
mhm,
so on. And so, I viewed my role is to, okay, how do I free up as much time from my founder CEO as
mhm,
possible and do the things that need to get done. You need to file, you need to get your 409A done. You need to build out the pitch deck for this presentation. You
mhm,
need to go figure out how to manage the HR and onboarding. You need to go figure out how to do early customer success. All of these things that have to get figured out in the early days of building a company, but that aren't necessarily identify product market fit, get early customers, and hiring. And so, the role that I took on was largely a kind of business athlete type of function,
mhm,
and trying to, again, free up time such that our founders and early team could tackle the things that mattered the most and build the infrastructure around the company that
mhm,
would support that type of growth.
mm,
And uh, and I think that's a function that companies generally don't necessarily hire for as much, uh, but certainly could be value additive, especially if you can find somebody who's got a willingness and a capability and a level of kind of hunger and hustle, to get the things done that you can trust, to do some of these things. Like, every company is going to have to file taxes. Every company is
mhm,
going to have to do the registration. Every company is going to have to do 409A. All of these things that, again, are not going to make or break the company on their journey for product market fit, but will be massive, massive pains in the rear if you don't do them. How can you tackle those types of things, and not have the founders spend too much time on them? Because my goal, even at now as an investor, is like, focus in the founders that I partner with on the things that matter the most, and let everything else go by the wayside.
mm. So I guess, like, I have 2 questions there, like, before we hop into the investing side. So, one is, how do you grow into the role when the company gets bigger? Because
Sure.
I'm sure, like, when you first joined, the company was small, but, like, you were, like, the 7th employee, and in the end, they were acquired by GoDaddy. We're talking about Point right now. So,
Yep.
like, throughout this journey, like I guess like the beginning you were filing taxes and then like I'm sure like 5 years later you probably have a big team. Like
Yeah,
how do you quickly develop like a content diet or like a network for yourself? Because I think as a startup founder or like as a founder in general, I feel really tiring to figure things out every single day.
sure.
And without like a proper training, you have to train yourself on the go type of things. So I wonder, how do you kind of like have a content diet plus a network to be like, okay, like, am I doing this correctly? And you cannot ask your competitor about this, right? Like, you cannot
Sure.
just be like direct competitor, let's like, brainstorm and stuff. So, how do you kind of like have a mentor or like someone in the category of things that you're trying to learn while you are this first person who's like, on the non-edge side joining a company? Like, basically,
Yeah.
how do you know what to do in
No,
general?
look, absolutely. And I think the reality is most often there's not a right answer.
Mhm,
Most of the problems can be solved in a variety of different ways, and it's just about figuring out what's the way that's going to be best for the
mhm,
company and the
mhm,
situation.
mhm,
But I think a lot of times founders, early employees, companies think they are unique snowflakes, and
mhm,
all of the problems that they are facing are unique to them. And that's just frankly not true. I've seen it
mhm,
enough times. And so there's always going to be a first business hire at other companies, competitor or not. And there's always going to be content that's been written about various topics in solving these problems. We've got at Garuda a great content library that we've even pulled together when that we share, different bits and pieces of as founders have different challenges that they are facing. Again, trying to offer as much, feedback as we can as fast as possible to alleviate some of the stress that people are facing. And and so you have to build, as with anything, build your tribe, right? Find people at sister portfolio companies
mhm,
from your investors that you can get introduced to, and organize a dinner and just have a WhatsApp group talking about different problems, Slack groups talking about different
mhm,
challenges. uh, there's so much content out there that's been written from great people, experienced leaders, seasoned operators, venture funds that are aggregating together all of the best practices in and around various topics. You can, with a quick and cursory Google search,
mhm.
find this stuff now. Heck, we've even got all of the Chat GPT perplexity tooling that you can just
Oh
ask the
god.
problem and see, right? And most of the time, again, it's not make or break for the company.
Mhm,
And so you can get by with doing some of these things, and just move fast and be decisive, but do some of the work up front and ask around. And so I tried to build some of these communities myself. This is also kind of what I was able to take advantage of through some of the investors that had partnered with us both at Poynt and at Legion. First round capital, as an example, had a mentor mentee program that I was able to be a part of both as a mentee and a mentor. And so, the startup ecosystem is vast and broad. And more
mhm,
often than not, you'll be able to get help and questions answered. You just have to ask. And I think that's the hard thing, is most people don't ask,
mhm,
and spend a whole bunch of time that they could have saved simply by asking one person one question, instead
mhm.
of spending hours doing research on their own. Just ask.
I wonder when it comes to like shaping, like putting together your own fund, right? So you started this when you were still at a as an operator, and I guess like what were your investing strategy like when you first started? Were you just like, oh, let's just get into this deal that I randomly come across? But like back in time, you already have a good track record, like you know, investing in Canva is not small deal, right? Like,
Yeah.
so I wonder how do you kind of like having like a system for yourself to source and pick and win deals consistently.
Yeah, look, I think it's a byproduct of just the network and being out there, and being curious, right? I think the way, if I look back at even the micro fund, and now the investments that we've made to date out of our kind of debut institutional fund, which we closed last year, so many of these investments and the companies we've had the fortune of partnering with have been, referral from founder that we've worked with before, person
Mhm.
that we've gotten to know that said, oh, you
Mhm.
need to talk to the Garuda guys, researching different categories. Oh, that's interesting. Let's reach out, seeing someone post a cool, demo on Twitter, and pinging, right? I think it just, I believe venture capital is a service business, and we as investors are in service of the founders we partner with and the
Yeah.
LPs that have invested in us.
Mhm.
And I think taking it from that approach and having a give first mentality, I think has gone a long way. Certainly for me, in my ability to build relationships, and deliver value.
Mhm.
And I think especially at the stage that we're investing in, right? We're getting in at even pre-incorporation, in a lot of cases, and committing to founders before a company has been formed, before a bank account has been set up.
Mhm.
Uh, and that requires the ability to build relationships and get to trust quickly, and know kind of what you're looking for uh, in terms of a founder, a market, and their product vision. And
Mhm.
that's just a byproduct of, again, having been around for a long time, and having the benefit of being able to work in venture and then in building companies, and taking those learnings and lessons, whether consciously or subconsciously, and applying them to the companies that we're meeting. But we always try and start with give first, right? Let's offer
Mhm.
feedback. Let's make a valuable introduction. Let's connect you to a prospective customer. Let's see if we can be helpful, because even if we don't choose to partner with you on this company today, you know we have to operate under the assumption of positive sum games, and that down the road, if it's a positive interaction and we can do a good job of maintaining relationships, there'll be opportunities to partner together going forward. And that I've seen countless times. People that I met back in, when I first moved to the Valley in 2010,
Mhm.
met when I was at scale, got to know, didn't end up working together, lost touch, but I'll get emails saying, hey, congratulations on the new fund. I really enjoyed our conversation 10 years ago. There's a founder you should meet that I have
Mhm.
been working with that I think would be a good fit for you. And so I think, we try and approach every interaction in that way. And I think that has certainly helped in terms of both finding new opportunities and then
Mhm.
evaluating opportunities to deploy capital.
Mm. I wonder, when you were thinking about building a fund. So I remember hearing one of your podcast interviews with like the storytelling capital people. So like one of the things that you mentioned is like you wish you have built LP relationships early.
Sure.
Um I wonder, what does that entail to, like, if you're starting out today, like, how do you build a relationship early? And then what does that mean? Does that mean like you just first encounter an LP and then like start pitching them? Or would it be like, oh, let's grab a coffee and then be like, hey, what do you invest in? Like, how do you build the relationship? And what does it consider as a relationship? And at what point do you kind of start pitching your fund?
Yeah, great question. Look, I think venture building a venture fund
Mhm.
is 7 kind of core swim lanes,
Mhm.
right? Fundraising, sourcing, picking, winning, supporting, exiting, and then kind of venture operations, the business of the fund.
Mhm.
And uh, most people focus in on the sourcing, picking, winning part, which is
Mhm.
understandable. That's what most investors have to
Mhm.
do,
Mhm.
with some support. But as a founder of a firm, as a co-founder of a firm, fundraising is in
Mhm.
fact a very important thing to do, because
Mhm.
if you don't have the capital to invest, well, the rest of it doesn't matter.
Mhm.
And so, as when we invest in founders and are looking to build relationships and get to trust quickly, see if we can connect dots to make lines, LPs also do the same thing with the GPs that they back.
Mm.
And so, wherever possible, to have a relationship that's built over time, whether there's been capital that's been invested or not between an LP and a GP, to consistently be able to demonstrate the quality of character, the decision making process, the type of firm that you're wanting to build, and then showing how you have in fact stuck to what you said you would do and have been disciplined and diligent in your approach to building your firm, I think goes a long way, especially when there are so many now more venture firms and funds that are out raising than there were, even 5 years ago. And
Mhm.
so to be able to establish a relationship, have a certain level of credibility and trust with LPs uh, goes a long way towards convincing someone to give you capital that you can go invest, because there's nothing really to go on, especially as a first time fund, right?
Mhm.
Yes, there's track record, but is it a applicable track record that can be transferred? You're trying to prove to LPs that your approach to building a fund and investing behind companies and supporting them will yield the return profile that they're looking for. But venture marketing is quite consistent across all of the firms, and so it's hard for LPs to separate the ones they want to work with and the ones they don't. And so as much time as you can give yourself to be able to build relationships with LPs before then asking them for money, I
Mhm.
think the better. And also being truthful and open-minded for yourself around this type of firm you're building and the fund you're raising and the types of LPs you're talking to. The reality is an endowment at a large school, Carnegie Mellon, UCLA, Harvard, make it up,
Mhm.
is likely not going to be the best fit for you if you're raising a $5 to $10 million fund, just
Mhm.
because the check sizes don't make sense. And so making sure you're qualifying the LPs that you're speaking with,
Mhm.
and that they are likely ones that can partner with you in the near to midterm, I think is a part of it that is also equally important. Because it can feel great to say, hey, I had a great conversation with UCLA. I'm making it up. But if UCLA is trying to write a $7 to $10 million check and your whole fund is $7 to $10 million, it's probably
Mhm.
not going to be a fit. And
Mhm.
so make sure action is not a substitute for progress towards the ultimate goal.
Mm. So I was browsing like, people's like fund deck or whatever. It's a public information on like people's
Sure.
blog or like Substack or something. So I wonder like I often see like people list, let's say there's a lot of amazing operators or angels or LPs in their portfolio. And I wonder like when you were pitching to LPs, how do you kind of define your edge? And how do you kind of like position yourself to be differentiated? Like, yeah, like I guess I'm like repeating myself. I feel like one of the things is like I repeatedly seeing like people's deck have like a bunch of amazing logos, but like my question is like, are they actually close with these people? Like, if I'm like a portfolio company, will I actually be like actually plugged into any of these ecosystem? Like, am I gonna get an intro to, let's say, the founder of GitHub to get some sort of
Sure.
specific advantage of something? And like, how do you kind of like, position yourself to be unique enough that people would put money into you? And then when it comes down to um like LP investment, like I've heard consistently, it's like, w- what's your differentiated strategy? What is your differentiated deal sourcing ability? Like and then picking of course like comes later, portfolio construction comes later, but when you're like very very early stage, those are like the two things that people kind of tend to focus on. And how do you communicate that into your pitch, into your deck? And then like there's a lot of amazing operators and people within the ecosystem that they could all kind of say they have the same edge, which is operating. And
Yep.
like, I wonder how do you kind of like highlight your edge? And when we just talk about like, building the relationship, what are the tactical things that you would do right now? Would it be like, let's say like let's say meet 100 emerging manager and ask them to introduce you to their LPs, and like you got a coffee with the LP and then kind of like be like, hey, in the next 6 months, I'm gonna deploy X amount of capital into 6 companies, and this is like what I expect my outcome to be, and then you actually do that. So like the LP will be like, okay, I got this now. So you're like actually doing what you're doing. Like, what exactly are the things that you should be actually doing right now to, get the process started?
Yeah, absolutely. Um, So look, I think in terms of Garuda and the way
Mhm,
we position ourselves, we're we're operator led, right? And so we bring the experience of both being investors and operators to the table, and founders to the table in partnering with our companies, and want to be able to traverse the strategic conversations all the way
mhm,
to the tactical, and deliver that value not just through us but through our extended network and the community that we've built around us and Garuda over the last 14, 15 years
mhm,
working with startups. And so that uh, we very much try and show, don't tell. And so we
mhm,
provide examples of that. We provide we do sessions with our founders. We bring guest speakers, dinners, things of that
mhm,
sort. We try and demonstrate that this is in fact how we deliver value to our portfolio. Another one is, we are ownership driven, right? We
mhm,
are not investing small amounts of capital into very large rounds, and kind of logo chasing
mhm,
necessarily. We very much try and co-lead investments that we make, particularly at the pre-seed, and are not afraid to build the conviction in order to do that. And in fact, we do that every single time, whether we're leading, co-leading, or following. And I think that approach, and kind of the way we're thinking about portfolio construction, uh, really matters. And I think has helped differentiate us compared to other funds of similar size
mhm,
and approach. And then we're sector focused and we're stage focused, and so we're not trying to play across seed all the way to Series C and D, and investing in growth and investing in pre-seed, and investing in across all categories. We're
mhm,
investing behind categories where we ourselves have built businesses, have built networks, have deep ties into both customers, advisors, prospective hires, talent, and the like, and where we have formed opinions about where the future is going. Not to say that we are thesis driven. I think that we very much rely upon the founders to tell us where the world is going, but we can ask the right questions to call bullshit or not
mhm,
on what they're building. And so we just kind of reinforce these three messages uh, through our presentation, through the conversations that we have, and it's how we are architecting our fund, and kind of where we want to deliver value for our portfolio founders, and for our LPs. And in terms of
mhm,
how do you find them, it's a variety of different ways. And so if for us, it's all about, again, building relationships and being in a give first mentality at the outset. But when
mhm,
it's harder to meet for the first time and ask for money, because now you're asking for something, as opposed to, hey, what does success look like for you? Whom might I introduce you to? What are you looking to learn about? Things of that sort.
mhm.
And again, deliver value to a prospective LP before asking them for anything, is the approach that we're taking. And so we host dinners, bringing together founders and LPs. We when we do our updates, we try and do a very thorough job with our reporting, share some of that material with prospective LPs, get together in person, are willing to get on planes to meet people, and again build that relationship, all in an effort to hopefully differentiate ourselves and the approach that we're taking to building this firm,
Mhm.
and ultimately earn the rights to gain an investment from an LP.
I want to double click on like, the social element of meeting LPs. You mentioned like, connecting founder to LPs and um like so what does deliver value to LP consider off? Like so basically like is that like they just want to meet portfolio to do direct investment, or like are they trying to understand where the market is going, understand your network, so you're kind of showcasing your network? And in terms of like picking the right founders. So there's a lot of, I think like pre-seed is the hardest part to um pick when you are going with like a high conviction model.
Sure.
I feel like it's a lot easier when you are just like do the numbers game. per se. So I wonder, how does your portfolio construction look like? And then before you started the fund, were you I know that you were like angel investing, and I wonder, like, there's other school of thought which is like, creating SPV to logo shop,
Mhm.
or like creating a syndicate to go after certain companies, and then there's like, the scouting for other bigger funds.
Yep.
um if you're starting again, like, which route would you pick and why?
Yeah. So you first question you asked was about value delivery to LPs.
Yeah.
And the answer is it depends, because
Mhm.
different LPs want different things. And so, we don't, just like with our founders, different founding teams need different things from us and different types of support from us. Some people need help on the go to market. Some people need help on hiring and talent. Some people need help on
Mhm.
the operations side. And so we don't try and force everyone through a similar support process.
Mhm.
It's very bespoke in terms of how we approach our founders. Very similar to how I have two kids
Mhm.
that both came from the same place, and I have to treat them very differently. LPs
Mhm.
LPs are the same. Some LPs want to understand where the market is going. Some LPs want to meet other LPs and learn about from them and about what they're looking at. Some LPs are looking to build connections with founders for direct investment opportunities. Some are just looking to build relationships with us and want to see, like you said, what does our network look like? Can I trust these people with my capital, and so on? And so we try and tailor and cater to the specific needs of the individual LPs in a variety of different methods that, you know, it's not one to one. There's definitely ways you can scale that,
Mhm.
but we try and do that as much as possible, again, to give people what they are looking for and
Mhm.
deliver to them what they are looking for, as opposed to trying to back them into something that is more convenient for us. And I think, again, going that extra mile is helpful, and oftentimes is what separates a good from a great manager, founder, employee, you name it, barista, right?
Mhm.
Someone who goes that extra mile, you take notice, you pay attention. Um, and then I forget, what was the second question that you asked?
Um,
Oh,
kind
portfolio construction. Yeah.
Yeah.
Look, the reason I love pre-seed and kind of seed investing, early stage investing, is it feels like the most pure, because there's
Mhm.
not a lot to go on, and so you have to distill it down to the things that matter the most. Again, to repeat,
Mhm.
it's founders, the market, and the product vision, and all of the kind of sub bullets under each of those,
Mhm.
because I think data can sweep a whole bunch of flags under the rug, and often can lead to making the wrong decision for the wrong reason. And so, for us, we're trying to build a portfolio between 25 and 30 companies.
Mhm.
uh, we generally invest between, you know call it half a million and $1 million, sometimes up to 1 million, 2.5 million. And it's typically, as we're constructing it, is generally going to be, call it 2/3 pre-seed, 1/3 seed.
Mhm.
We are trying to be disciplined in our approach to investing, and the types of companies we're backing, and the valuations that they're entering at. Our post money valuation for our pre-seed portfolio right now stands at 7.8 million post. And I think, again, indicative of the risk that we're taking, the sizes of rounds, and kind of being true pre-seed, and we're trying to stay very disciplined and diligent on that, just because you know there's all this talk online and on Twitter. It's like, oh, the entry valuation doesn't really matter,
Mhm.
especially for the big ones. It's like, that's true, but that's only if you know ex ante that this is going to be a big one. And
Mhm.
so, otherwise, entry valuation matters a lot, because the difference between entering at 5 and the difference between entering at 15, and the outcome that needs to be delivered in order to return the same amount of capital, is 3x.
Mhm.
And so that's why, again, we try to stay very disciplined as a firm, Uh, and again, that it works for us, right? Not to say that this is the only way. Obviously, the one of the best things about this job is that there are many ways to do it, and so you just have to find the ways that are most authentic for you and build a firm that is as close to that authentic approach that you're taking as possible, because otherwise it just becomes too hard. Uh,
Mhm.
and it's important to understand why you are doing something, why you're taking the approach that you're taking, and try and live as authentically as possible and align that with the
Mhm.
work that you're doing. I love working with early stage founders on early stage problems.
Mhm.
I know I want to be at this kind of inception stage,
Mhm.
incubation stage, kind of -1 to 0, 0 to 1 phase. That's where I have the most fun.
Mhm.
And so that's why we've chosen to build this way. That's not for everyone, of course.
Mhm.
And so it's important to align where you're deploying capital with your own interests and curiosities, because that, I think, will lead to the best outcomes in the long term.
What were the questions that you would ask to see if this will turn into like $1 billion business? And what's your mentality into this? Is it like every portfolio company that you invest in would have the opportunity to potentially return the whole fund, or like how do you kind of like think about it? And some other people's fund strategy could including, core, which is like a certain maybe major amount of capital to invest in their um like the core strategy
Mm-hmm.
portfolio companies. And then there's like opportunistic,
Yep.
which is maybe investing in like potential like breakout companies. And then there's like exploratory, which is, a small check into either very early stage company or like um very competitive rounds for top tier VC firm investments. So, like, what's
Sure.
your thought on these strategies? And then, like, why do you feel like the strategy you pick is the right fit for you? When you mentioned the authenticity, like, how do you figure out what is a good strategy that will leverage your ability the most?
Yeah. So when we invest, we believe that the company that we are backing should have the capacity to return the full fund.
Mm,
And if it doesn't, then it could well be a great business, but it's not going to be a type of business that is one that we should invest in, just because the math has to math, right?
the math.
And so the math of a venture firm is largely like you're trying to return multiples on this capital,
Mm,
and as a result, uh, you need to have some very, very big winners in the portfolio, because there will most certainly be losers and zeros that are in the portfolio. That's just the nature of the job and the risk that we're taking, particularly coming in at pre-seed. And so we
mhm,
want the opportunity to be able to return the full fund. Whether it does or not is beside the point.
mhm,
And so that's why we have the 25 to 30 core positions. Now we do have what we call our non-core, and this is where we will invest a smaller amount into a handful of companies to support the founder, because we know them. It's an interesting or a new area of exploration for us in terms of category and so on. And
mhm,
so when we look at that, we view the collection of the non-core as one kind of core position, and that in aggregate we believe that those have the opportunity to return the fund. But again, any individual position, just because from an ownership perspective you just don't own enough, would be hard. And so that's why ownership matters to us, right? Because if you own 10% of a company at the outset and you get diluted down to 5% ownership of the business when all is said and done,
mhm,
if you exit at a $500 million valuation, that's still a very meaningful amount. And then if you exit at a billion plus, now you've returned your fund.
mhm,
And so as a smaller firm, and having kind of right sized the amount that we raised and the target sizing,
mhm,
we felt like there's a lot of opportunity to make money for us at this phase, and we don't have to rely upon the 10 to 50 billion dollar outcomes to deliver that type of return that we're expecting for ourselves and for our LPs.
mm. When you were thinking about like, you know, the LP constructions, like, so would you say like, let's say like, people probably first started with like friends and family, and later on they branch out into eventually like institution investors, right? Like, and then there's also a lot of people are focusing on having like big operators into their network. Are those like actually useful? Oh, also want to be mindful of the time. So I want to like learn more about like, what
Yeah, I
are
can answer this question and drop. Yeah,
yeah.
yeah. Yeah, look, I think everything is an evolution. Uh, when you're building a venture firm, it's just like building a company. Like every couple of years, you just up level, up level, up level, and you're trying to get better
Mhm,
every day. And so, for us, we've got an amazing LP base that has a couple of institutions, a bunch of family offices, and a bunch of great operators, and even founders that we've backed. You asked, one of the signals of, show don't tell. We've been so fortunate to have 14 founders that we've backed to invest as LPs into the fund
mhm,
as a signal of their support, and are so grateful for
mhm,
their participation in joining us. And as the strategy changes or evolves, and as the fund sizes grow, certainly the LP base will also change. And so this is where again you have to just continue to keep evolving yourself, keep improving, build those relationships. Do what you say you're going to do, make great investments, support the founders that you're backing, and be able to point to some signals of ongoing success. One of the hardest things about this job is the feedback loop, as measured by
mhm,
return, is very, very long,
mhm,
and that can be challenging at times. But as long as you again know why you're doing it, know what you're doing it for, and are looking to get better every day, hopefully it leads to success. And at least that's the only way I know how.
mm. I have like a tiny question and then
Yeah,
1 minute fire round. So, I want to double click on like, as you mentioned, like the feedback loop is really long, right? So a lot of the people's benchmark on if they're successful, it's like the follow on round. Are they lead by a famous investor or are they um do they have follow on rounds? So like I
sure.
guess like how do you measure success throughout the process?
Yeah, look at those. You start with okay, what do the numbers look like? Have there been follow-on rounds? Have the companies been able to grow? But again, we want to make sure we were appropriately capitalizing our companies. And
Mhm,
so, unlike 2020 to 2022, 23, when follow-on rounds were happening every 3 to 6 months, the market has changed. And so, we look at, yes, of course, the TVPI and the multiple on invested capital as some indicators, but have the companies been able to execute the way we thought? Have they built the product? Have they got customers? Has the revenue grown? What does the revenue look like? What's the month over month growth rate on the key metrics? This is where again for us we dig in with our companies. We are very engaged with them and looking to support them. And so how can we move the metrics on key KPIs and move those numbers to deliver value, is how we are again finding early signs of success, as
mhm,
well as is the awareness of us and who we are continuing to increase. Are we seeing great founders getting referred over to us? Are we able to find and identify great founders and partner with the ones that we believe would be good fits for our firm and what we're building? And so it's an ongoing evolution. But
mhm.
if I come up with a better answer, I'll definitely let you know.
Thank you so much. So we have a 1 minute fire round. Also, hi Guy. So he has a question about why is it difficult to interest investors in the United States when you are coming from Europe. I think it's just the geography. Like, you should focus on like the investor who invests in Europe, maybe.
That's right. I think that's right. And
Okay.
LPs are going to want to. Some LPs want to invest where they have built companies before, where
Mhm.
they know the markets. Others want exposure to other things. I think it's finding the right LP base that's looking to invest where you are is the key.
Amazing. Okay, so we have 1 minute fire round. What's your favorite book?
When breath becomes air.
Wow, that's a specific book. Who made the biggest impact in your career?
Oh, so many people. My family, as a broad strokes. My wife definitely, and my parents.
Who would you invite to your dinner party?
Who would I invite to a dinner party? Am I hosting the dinner party?
It's your party.
Oh man, it really depends on who's coming. Uh, I'll say no, pass. I don't know. Too hard.
What?
Too hard. Too many people. Because then you could do a dinner party. You could do a dinner party about people talking about new technology, which would be one people. You'd be talking about
Oh my god.
politics in the world, a different set of people. So yeah, no, too hard. Pass.
You're the first person who passed on this question. Where can we find you outside work?
At my house with my kids. I coach my son's basketball team. So generally at a park or at the gym.
Oh, same. Thank you so much, Rishi, for coming on the show today.
Thank you so much, Grace. It was great to reconnect here. Thank you for having me. Hopefully, this was helpful for you and your audience, and I look forward to doing it again soon.
Thank you so much.